my view is the next time we have one, it's going to be the worst in my lifetime. 2008 was bad because of debt. The debt is so much higher now that the next recession has to be the worst in my lifetime. If I were the head of the Federal Reserve, I would abolish the Federal Reserve and then resign.
Jim Rodgers, co-founder of the Quantum Fund and creator of the Rogers International Commodities Index, has been a well-known figure in international investment banking for decades. Since his retirement, he's traveled across the world and put down roots in Singapore, eager to set up his family for, as he sees it, great opportunities to come. He claims to see a massive recession beginning, worse than he's ever seen before, and he has just the idea to keep investors afloat in tough market conditions. In this essential investing highlight, Rodgers speaks his mind on the central bank's roles in inflation and the global recession looming over the horizon. He shares which asset classes will boom and which are still in a bubble, so you can adjust your investments for maximum profit.
But there's a big world out there, but the U.S. is the largest and most important market. The U.S. has had the longest period in its history without a big major problem, economic problem. Since 2009, things have been reasonably good in the U.S. That's the longest in our history. That does not mean it cannot go 30 years, man. But the facts are this is the longest ever. So it causes one to wonder. Now, I wonder a lot because I see huge debts that have piled up since 2009. We had a big problem in 2008 because of too much debt. Since 2009, the debt has skyrocketed everywhere. Even China has a lot of debt now. And China had no debt 25 or 30 years ago. But everybody has big debt now, especially us in the United States. Unfortunately, I don't like saying that. So we've always had bear markets. We've always had recessions. We will always have them, despite what the politicians in Washington tell you. And then my view is the next time we have one, it's going to be the worst in my lifetime. 2008 was bad because of debt. The debt is so much higher now that the next recession has to be the worst in my lifetime. It's simple looking out the window and seeing what's going on in the world. So my view is that we are in a period, a dangerous period. Interest rates are going higher. Inflation is going higher because they printed staggering amounts of money. Everybody printed staggering amounts of money. America, Japan, everybody printed huge amounts. So we have this big inflation problem. It's not going to go away without drastic action. And as interest rates go higher, it's going to affect markets around the world, and we're going to have a very serious bear market. You should be worried. The fact that interest rates were the lowest they've been in recorded history is a danger sign to me. That's not a good sign. They can only go up. They have to go up if they're the lowest they've ever been in the history of the world. And they were artificial. They were absurd, as we're all finding out. But Mev, I was around in the 70s. Interest rates on Treasury bills went to 21%. 21% on Treasury bills in 1980. So when we have serious inflation problem, it's hard to deal with, and it takes drastic action, and it hurts.
I feel like the consensus at this point is that everyone believes that it's coming back down and quick, but the long history of inflation is often such that it tends to be a little sticky. Once you have inflation pop up, very rarely does it kind of pop up and come back down. Would you say, was that your experience? Is that your familiarity, or how to kind of?
Well, Meb, as you know very well, nothing goes straight up or straight down. There are ups and downs. There's corrections along the way. That happens with inflation too. And yes, if the price of oil skyrockets and then calms down for a while, people think, inflation is coming down. But they're usually temporary, especially when you have staggering amounts of money printing. And it's compounded by war. War makes it more difficult to plant crops or to harvest anything when you have war. But the main problem, we had inflation before Ukraine. And unless something is happening dramatic, we're going to continue to have inflation because as the economies slow down worldwide, central banks will print more money. The Japanese are already printing staggering amounts of money. And they have said, we will continue to print money. It's the second largest economy in the world, the third largest economy in the world. So when you have all these guys printing money, and Washington will too, don't think that if things start slowing down, Bev, the Federal Reserve is going to print more money. They're going to loosen up again. They don't care about you and me. They care about their jobs. And that's how they think they'll keep their job. It's not good for us, but they think it's good for them.
Rogers goes on to comment on rising interest rates and the coming recession and which assets will weather the storm best in your portfolio. Hit the like, subscribe, and bell notification so you get immediate notification of tomorrow's episode where Mr. Wonderful, Kevin O'Leary, reveals what he is doing with his losing crypto bags and stock holdings this year to get some of the losses back from the taxman.
If I were the head of the Federal Reserve, I would abolish the Federal Reserve and then resign. We've had three central banks in American history. The first two disappeared for a variety of reasons. The world many times has not had central banks. The world has survived without central banks. In my view, usually these guys make more mistakes than they, people think they're smart. They're just bureaucrats and academics. They're no smarter than the market. And in my experience, the market is smarter than I am. And I presume it's smarter than the central banks, too. So I'd get along without central bankers.
Okay, so rates have come up pretty quick. Inflation even faster. I think we were over 8 the last time. We'll see where it comes in October. What's the average investor to do? Where do people hide out? What should they be thinking about? What should they be doing in a world where stocks and bonds are both getting hammered at the same time?
Well, first of all, there are other investments besides stocks and bonds, but my main answer to you is people should only invest in what they themselves know a lot about. Don't listen to other people. Stay with what you know. Don't listen to hot tips. Everybody wants a hot tip. Everybody wants to be rich this week, including me. I'd like to be rich this week too, but hot tips will ruin you. So the main advice is stay with what you know. And everybody listening to this knows a lot about something, whether it's cars or fashion or sports, something. Stay with what you know. And when you see an opportunity, then you should invest. Now, people say that's boring. Be boring. If you want to be rich, be boring. Stay with what you know, and you will have great opportunities.
For quite a while, definitely became associated with an area we talk a lot about on this podcast, is the world of natural resources, in particular commodities. How does commodities look to you?
Well, let's look at all assets, which is what I have to do every day of my life. We know that bonds are still in a bubble. Bonds have never gotten that expensive in the history of the world. So bonds are a bubble. Property in many places is a bubble. If you go to New Zealand or Korea or many places in the U.S., property is absurdly expensive on a historic basis. Stocks, we have been talking about, some mini stocks got to be crazy. Samsung went up every day. Apple went up every day. Some stocks were clearly a bubble. The only thing that's not a bubble that I know of is commodities. Silver is down 60% from its all-time high. Sugar is down 60% from its all-time high. These are not bubble kind of numbers when you have assets that are down 50, 60, 70% from their all-time high. So the only asset class I know that's not a bubble or hasn't been in a bubble are commodities. And everything that's happening in the world is good for many commodities. It looks like we're going to have electric vehicles. Well, electric vehicles use 4 or 5 times as much copper as a gasoline vehicle. And nobody's been opening copper mines and lead mines for a long time. So it looks to me like the fundamentals as well as the prices for commodities might lead to opportunities.
How do you think about, for most investors, is it the actual, commodity exposure itself? Is it commodity equities? Is it both? Does it depend? How should people really be thinking about them?
Well, there are many ways to invest in commodities, agriculture. I mean, the best way is to become a farmer. Buy land and become a farmer. You get extremely rich. But other than that, you can buy shares, you can buy futures, you can buy indexes. There are many ways to invest in commodities, some of them simple ways. Didn't say it was simple to make money. I said there's simple ways to invest in commodities. And then go to it. But most people are afraid of commodities. Everybody's told them all their lives that commodities are dangerous. Well, yes, anything is dangerous if you don't know what you're doing. But if you know a lot about lead, you might make a whole lot of money if you figure out a way, whether a stock or futures or whatever, to invest in commodities. And commodities, by the way, are simpler. Nobody can know IBM or Microsoft, not even the chairman, because there's so many employees, et cetera, et cetera. But sugar is very simple. We all know what sugar is. Everybody watching this knows what sugar is, so that's a good start. And if you can figure out the supply and demand, I didn't say it was easy. I just said it's easier than figure out IBM or Microsoft or Apple or something like that.
Watch this video that blew up the internet where Michael Saylor reveals, in the best speech I've ever heard on Bitcoin, why Bitcoin is still so undervalued, how Bitcoin will skyrocket to new all-time highs, and why Bitcoin is the best chance we have to defeat tyranny.